Welcome to the deep dive. We take your materials, pull out the key insights so you don't have to wade through everything.
That's the goal.
Today, we're kind of setting sail into the recent financial reports of the three major Japanese shipping companies. We've got Nippon Yusen, often called NYK Line.
Right.
Mitsui O.S.K. Lines, MOL for short. And Kawasaki Kisen Kaisha, which most people just know as K-Line.
Yeah, these are, huge players. Really the backbone of global trade, moving everything from, well, cars and oil to all the stuff you buy online.
Exactly. And looking at their financial health, it gives us a really good window into the shipping world, right? What's happening now, maybe where things are headed.
Absolutely. And we know these reports, they can look like just a wall of numbers sometimes. So our aim today is really to break down the key info and see how these companies actually stack up against each other.
Perfect. You shared some great sources. MOL's financial highlights for their year ending March 2024, NYK Line's IR fact book for 24, and also their latest IR data looking ahead to the year ending March 2025.
That's right.
Okay, let's dive right in. Maybe start with Nippon Yusen, NYK Line.
Sounds good. NYK Line is, well, they're interesting because they really do a bit of everything in shipping and logistics.
Okay.
They've got a very diverse fleet. Container ships, obviously, for consumer goods, dry bulk carriers for things like coal, grain, car carriers, tankers for liquids, even LNG carriers for natural gas.
So a really wide
A
range.
very wide range. And on top of that, they're involved in traditional logistics, the energy sector, and they're even dipping their toes into green business ventures, more environmentally focused stuff.
Right, and the numbers. What do their financials look like? For the year ending March 2024, that IR fact book showed revenue of $2,616.0 billion.
Yeah.
Operating profit was $261.0 billion. And their net income, at the bottom line after all expenses, was $240.2 billion.
Solid numbers for that period.
But then, looking at their more recent data, the forecast for the year ending March 2025, those figures have, well, come down a bit. Revenue projection is $2,387.2 billion.
Okay, a decrease there.
Operating profit expected at $238.3 billion, and net income projected at $166.8 billion. So a noticeable drop, especially in net income.
Yeah, that is a drop. But what's kind of notable here, even with that dip, is NYK's strength really seems to come from having their hands in so many different pots.
Diversification.
Exactly. That variety helps smooth out their earnings. If container shipping is down, maybe dry bulk is up, or energy transport is steady, it gives them stability.
Makes sense.
And they're also putting a lot of focus on ESG environment, social governance, things like developing cleaner fuels. That could be a real plus as environmental rules get tighter.
And their future plans from that fact book seem to build right on that. They want to deepen their core businesses, but also grow new ones.
Right, adapt and grow.
The goal seems to be sustainable growth, responding to market changes and really investing in decarbonization. They're even thinking about getting involved beyond just the ships, like handling recycled materials, reduced iron, scrap.
Expanding the supply chain role.
Yeah. And in energy, it's not just LNG and tankers. They're looking at offshore wind power support, maybe transporting ammonia, CO2. It's quite forward-looking.
Definitely. And they've set some targets too, right?
They have. This is interesting. Aiming for an ROIC, return on invested capital, basically how well they use their money to make money of 8 to 10%.
Okay, that's a key metric.
And a net income somewhere between $200 and $300 billion by the fiscal year ending March 2026. So aiming to bounce back somewhat from that 25 forecast.
Interesting goals. Okay, so that's NYK. Should we turn to Mitsui O.S.K. lines now?
MOL.
Yeah, let's look at MOL. How do they compare?
Well, MOL is also a big global player, involved in various sectors too. They do a lot with dry bulk, like NYK, but they have a particularly strong presence in energy transport.
Energy, okay.
Yeah, a large fleet of LNG carriers, also oil tankers. Then there's container shipping, where they have a big stake in that alliance called One. We should probably touch on that again later.
Right, the One Alliance.
Yeah, and they also do car carriers and logistics, similar to NYK. Got it. And their financials. For the year ending March 2024, their report showed revenue of $2,294.4 billion.
Okay, slightly lower than NYK's revenue for that same year.
But their operating profit was higher, at $341.4 billion, and net income also higher, or $311.1 billion. So a stronger profit performance in that specific year compared to NYK.
Interesting.
Now, for the year ending March 2025, we don't have exact numbers from the sources provided, but there was a graph in their highlights document.
Ah, right. I remember seeing that.
And that graph showed their main profit indicators trending, well, downwards from that high point in fiscal 24.
So it's pretty safe to infer they're expecting or experiencing a decrease in revenue and profit for the 25 fiscal year.
Yeah, that seems very likely based on the visual trend they provided, a normalization, perhaps.
That makes sense. That likely decrease probably reflects the wider shipping market maybe coming back down to earth after an exceptionally, maybe unusually profitable period for many.
Post-pandemic boom cooling off.
Could be part of it. But MOL's strength, like we mentioned, is that diverse business, but especially their significant presence in energy transport. Those contracts often tend to be long-term.
Providing more stability there.
Potentially, yes. More stable earnings compared to, say, the spot market for containers sometimes. And just like NYK, you can bet they're heavily focused on adapting to environmental rules and investing in greener tech.
Okay. Now, the third one, Kawasaki, Kisen, Kaisha, K-Line. What about them?
Right, K-Line. Now, interestingly, the specific source materials we looked at for this dive didn't have their latest detailed earnings numbers like they did for NYK and MOL.
Okay, so less direct comparison data there.
Exactly. But we do know their main areas. They operate in container shipping, and importantly, they're also part of that one alliance.
With NYK and MOL?
Correct. They're also in dry bulk shipping, they're significant in car carriers, and they do logistics work too.
So some overlap with the others, but also maybe known for particular strengths.
Yeah, definitely known for car carrying. And being part of one is a huge factor for their container business. It allows them to gain efficiencies, share resources, and compete on a global scale alongside NYK and MOL in that specific sector.
So that alliance is really key for all three when it comes to containers.
Absolutely crucial.
Yeah.
For K-Line's future strategy, while we're inferring a bit without the latest financials in front of us, it's very likely focused on maximizing those synergies within one for containers.
Makes sense.
And probably focusing on securing good long-term contracts where they can, especially in areas like car carriers and, like everyone else, exploring green shipping initiatives.
Okay, so if we kind of pull back and compare them, NYK, we saw that dip from fiscal 24 to the 25 forecast.
Yeah, just to recap those NYK numbers quickly, revenue went from about $2.6 trillion down to just under $2.4 trillion. Operating profit dipped slightly from $261 billion to $238 billion. But net income saw that bigger drop from $240 billion down to about $167 billion projected.
Right. And for MOL, while we don't have the exact 25 numbers, the trend graphic pointed downwards from their strong 24 results.
That's right. The visuals clearly suggested that normalization, things may be returning to more typical levels after potentially a peak year. It just highlights, the cyclical nature of the shipping industry sometimes.
Definitely. And the business-focused differences are interesting too. NYK, with that really broad diversification.
Yeah, across many segments.
Versus MOL, which seems to have a particularly strong footing in energy transport.
That's a key distinction, yes. But again, it's so important to remember that on the container side, NYK, MOL, and K-Line aren't just competitors, they're partners.
Through one.
Through the Ocean Network Express Alliance. One. Think of it like they've pooled their resources in that specific, very competitive market to operate more effectively worldwide, sharing ships, sharing routes. It helps them compete against other global giants.
Got it. And looking ahead, it really sounds like the common thread, the big challenge, but also maybe opportunity for all three is navigating stricter environmental regulations.
Oh, absolutely.
And investing in decarbonization. You mentioned NYK specifically talking about LNG-fueled vessels in their strategy.
Exactly. That's a concrete example. Going green, it's not just about compliance anymore. It's about long-term business sustainability.
And potentially a competitive advantage.
For sure. Yeah. Companies that lead the way in adopting cleaner fuels and technologies, they could really set themselves apart as the world pushes towards, a lower carbon future.
So wrapping this up, key takeaways. NYK Line saw that recent decrease in revenue and profit, but they've got that diverse strategy and a strong ESG focus.
Right. MOL likely saw a dip from a high point too, but benefits from that robust, possibly more stable energy transport business.
And K-Line, while we didn't have their latest numbers, is a key player in one, focusing on containers and car carrying.
Yeah, looking at these giants gives you a pretty good snapshot of the global shipping industry, how it's dealing with market shifts and those really significant environmental pressures.
It definitely does. So maybe a final thought for you listening based on what we've discussed, their business focus, the financial trends, their future strategies. Which shipping company do you find most promising? Something to think about.